Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market was choppy last week and worked its way to mixed or modest gains as the major indexes had opportunities to fall and then work their way back up each time. Traders heard some bad news and then did sell the markets, but then we saw, as we've seen for weeks and weeks, that you just can't hold this market down. The president did come out with a threat that he was going to impose tariffs on another $200 billion of goods from China, raising that number from 10% tariff up to a 25% tariff. Markets did not like that, and then China came out and said they will retaliate on $60 billion of goods from tariffs in the amount of 25% down to about 5%. Market didn't really care much about that. Japan did lose control of its bond market, and we saw bonds in there wild overnight, and the 10-year yields spiked all the way up to 13.5 basis points. It's just a crazy world there in Japan, as they have kept this NIRP policy, negative interest rate policy, for all of these decades, and it has not brought growth in their markets. You got to really wonder about that. I'm going to talk a little bit more about that in a second. So we had that going on, and we had the Chinese market basically collapsing. I mean, huge declines there. I'm going to show you those charts in just a second. And then what happened was that, well, if there was any chance of the U.S. market getting sold, it was Apple and Tesla to the rescue. Apple becomes the first $1 trillion stock. Well, we all know that as their market cap gets over that, well, magic number. And, well, was it not a magic number, 950 billion? So we had big gains in Apple for the week. Tesla talked its way up after having really huge losses in that company. And so the Tesla earnings, they really heartened the Tesla investors, as they simply got electrified by the comments out of Elon Musk, and the shorts simply got electrocuted as there were huge gains there in that stock. So that helped lift the NASDAQ up very significantly on Thursday, and basically that rescued the stock market this week and brought it to where most of the indexes could get to gains. Our analysis has been for a resumption of the bullish advance, and we have gotten that. That has been correct. Still, there are reasons to question the viability of the leadership that we're seeing in this market. In fact, we did a video on Thursday on that for our members, and I really encourage you to watch that. It's about market sectors and how to look at less to learn more. And that, I think, is an extremely valuable thing when you can narrow down your focus, well, from the S&P 500 down to maybe 20, 25, 30 stocks that can give you a real good sense of correlation. You get a lot of understanding of the market, and we show you how to do that. And the messages were very mixed. In other words, what they were saying was that the leadership to the market looks like that is weakening. So when you think about market leadership, well, the world markets do tend to move in consort. But there are some things going on here that really have to bring some sense of caution. Now, we have all this stuff going on around the world about tariffs, right? And negotiation or not negotiating, the president's threats, whether they're real or not. Some tariffs are actually in place. And the China economy has been slowing. And it's all the way down to like 6.5% growth, but that's really slow for them. I want you to see what's going on in the Chinese stock market and what our projections are. And we're also going to look at the Japanese market and emerging markets and get some sense about what's going on in the world when I say, well, our stock market has resumed to the upside. And I want to put out a word of caution on that as we look at these charts. This is China right in here, and we're a little worried about the China syndrome. As you can see, for those of you that are chartists, there is a head and shoulders top in here. You could see left shoulder and the head and the right shoulder. You can see that right there, and a breakdown of the neckline. That projects way down over here. If you understand our cycle analysis, you can see these cycles that are right in here, and those are essentially saying that after this breakdown right here, that this essentially is just a corrective consolidation period for the next decline. This goes all the way out into late November or early December, and we're a little concerned that that matches with some patterns that we see in the U.S. stock market. This is a breakdown, head and shoulders breakdown, negative cyclical patterns, and really looks like when it gets under this major fib support, it's going to accelerate again to the downside. This is a really bad pattern when we look at that. That's one I wanted to show you. The next one I want to show you in here is the pattern on Japan, which is EWJ. We're looking at the ETFs in here. Boy, does this look familiar, actually. You can see that we had positive correlations going, positive configurations going on. 1, 2, 3, 4. These have been bullish markets riding that 34-week moving average up until we had the breakdown here. And note the negative configuration. You see that downward move right there? And the failure right over here underneath that 34-week moving average, which was giving it support all this time. Yes, the target for this is into late October, early November on the downside, and it could have some significant decline still. So Japan, to us, looks like it's got problems also, and we think the Japanese currency is going to be stronger than the U.S. dollar here moving forward, which also is not going to be good for their economy. So that is EWJ. Wanted you to see that. And one more we're going to look at in here is EEM, which is the emerging markets. Let's take a look at a little bigger picture in here as I go out to show you this cyclical patterns right in here. Look at those magnificent market rhythms that we see in there. And yes, the present market rhythm takes it down to early end of October, early November right there. If I take a little closer look in here for you, you can see it's failing underneath this resistance zone, and these two cycles nesting and pointing out here into mid-November. That, as I say, matches a lot that we see in the U.S. market. This is almost a perfect bearish flag or wedge going on right in here that you can see right here. And if we get a breakdown under that level, it's going to continue on the downside right there. So I wanted you to see these three markets that are very significant right there around the world that are saying there is trouble out there. And if there is that kind of trouble in those markets, when you think about the size of those markets, they're huge. And the other, like European markets, well, they're somewhat better, but still not giving absolutely great messages. And that says to me that the U.S. is essentially an island of safety. How long can that be? That's really the question. So with world markets crumbling and set up for bigger declines into November, I got to think that the U.S. market, its days are numbered. I've been bullish now for just a few weeks, and I can project out based on some patterns that I see, and I'm thinking of a date based on an implied volatility pattern that suggests that there could be a boost coming in early September. We're going to look around September 5th to 10th as the end of this favorable period for the stock market, and then trouble coming. So for now, we'll just stay in our positive posture, but we want to really have our eye open for some sense of failures in there. That is an important look at world markets. Stock market here in the U.S. this week, as we have just some modest gains, and I'm going to show you as we switch over and look at the 60-minute chart of the S&P 500. Here is that chart, and you can see that, well, the stock market had those selling swoons, but was able to make gains after each of them. Here the tech stocks were weak and weighed on the NASDAQ here on Monday. That knocked it down. Bank of Japan came out and tweaked their policy. They're going to stay long-term with negative interest rates. That gave a little bit of boost to the markets overnight because they love all of this fiat money being printed, which brings all this financial engineering that raises stock prices. Mnuchin came out and says trade talks with China were ongoing, which turned out to be a bunch of crap. And right over here, just hours later, the president came out and threatened those 25% tariffs, up from 10% on $200 billion in China imports. Japanese bonds, they went crazy right over here, and Bank of Japan did nothing, so bonds fell sharply. Our bonds took a hit with that. Then we had an attempted rally here on Wednesday, and then the market gave ground. Everybody was waiting for Tesla earnings. They showed a slower burn rate in there. They lost $717 million. That's after subsidizing the cars that they sold with our money, and still losing that kind of money. And I'll show you that chart just a little later on. Here's another time when Japanese bonds were wild, yields spiking on a very poor auction there. China stocks fell sharply on liquidity issues and more trade war fears. So we had a big decline overnight. But then with Tesla rallying strongly right over here and Apple up another 3% on its earnings, you can see that market screamed, and the NASDAQ really led the market up right over here. Payrolls came out with a miss that only shook up the market for a few minutes, and then it started to rise here again on Friday. So we have this with about 2 hours to go in the market here on Friday. We're getting some modest gains again. For the week, the stock market, we'll call it mixed, but slightly higher. S&P 500, NASDAQ, and the Russell, tiny gains, and the Dow Jones Industrials, a tiny loss right now. Bond market mixed. The 30 years lost ground, the 10 years gained ground, and those were small, and the yield curve slightly widened based on that. The dollar up just a little bit. It's back in the rally phase that we had expected to happen. We also thought the euro currency would go into a declining phase, and that looks like it's happening, and I'll show you that in the short-term view. Gold down about $7 on the week as the dollar firmed, and the oil market, well, we had told our members that there was a short side setup in the oil market, and many of them wrote to me how nicely they got paid on that, with oil moving down about $2 on the week, and we'll show you more about that in our short-term view. So we have our best and worst stocks for the week coming, and always great analysis in there. My question for you is, do you want to up your trading game? Of course, you know, I've spent the last 20-something years as a facilitator in personal growth and coaching numerous traders in the markets. And I have, you know, through all of that experience, all of my trading experience, all of my coaching experience, put all of that together. And I want you to watch this short video, which talks about how you can get past those obstacles to success and then really raise your game. Here is a brief video, and then I'll show you the best and worst for the week. Hi, I'm Steve Miller. I want to take just a few minutes to talk to you about our new video workshop, the 5 Essential Building Blocks to Successful Trading. Well, it isn't exactly new, as I've given it a lot of times live, but I wanted to make it easier for people to benefit from our work and put it into a video series. this is not like any workshop that you've ever seen before. We don't, advertise that we're going to give you the winning system, that system that gives you the 1,000 or 2,000 or 3,000% return on the trade. This is much more different. It's about you, or really it's about me, because what I give in here is an expose of my 42-year history, talk a lot about the lessons I learned and, well, the pain or the challenges I suffered along the way to learn the lessons, so that you don't really have to do that. You can learn from what I experienced. This talks about the forces that are within me that really brought volatility in my history as a trader, and that may actually be doing the same thing for you, or many other things that may be challenges for you in trading. So in the intro, I give you all that history about me, and then I tell you what's coming in the next 5 videos, which I'm going to do right now briefly, give you a little bit of idea. Here is the 5 essential building blocks to successful trading. So in building block number 1, we talk about the underlying causes to the success failure cycle. That cycle where you're doing really well and all of a sudden you get into a slump. There's often forces within us that bring poor decision making. I share mine, what those negative forces are, and what has, really driven me to, a lot of emotional swings throughout, especially the early part of my career. And I help you find that about you, what brings these repeated behaviors that bring challenges to you in trading. Building blocks number 2 is about the reactions that we have, those emotional reactions. They're often really strong. That goes really hand in hand with what we talk about in building block number 1. That stress, the disappointment, that negative self-talk, the feelings of fear or shame or anger when things start to go wrong. So what we talk about and what we do in here is give some really good processing about how to build emotional fitness. That's really what number 2 is. Number 3 is, matching style, method, and personality. And what that means is that, we often struggle with style and knowing what, the right vehicle is for us to trade. And then, when we try to figure out what's right, we're not exactly sure how to match up those analytical tools. Also, there's sometimes mismatches in our personality and our experience in the market and our account size and our risk parameters that we designed for ourselves. So this is all about getting balance. And once you find that balance, actually that really helps with what we talk about in the previous building blocks, about the things that trigger those emotional reactions that could really get us into some trouble. Building block number 4 is about discipline. We look at 6 areas of discipline. It's not only about taking losses properly. So what we look for is getting in the right mind frame to be really focused. That helps us really stay on a plan that we build. And when we do that, we really can build greater knowledge. So the more discipline we have in all areas of our life, and that's what we really talk about, is discipline in life and in trading in this section, that really helps us to be a much better trader, much calmer, much more balanced in our life. Building block number 5 is about designing that plan, that unique plan, the basic design, understanding the win-loss ratio that we need to have to be successful, and about, reasonable expectations of returns, and how having, unreasonable expectations can really throw off our level of success. And it's about how to create that winning formula, the unique one for you. So, all of this really has got an overlay to it. It's all about keeping ourselves totally balanced and really helping us with how our emotions might get in the way of that. So that's really the overlay. It's about this being in balance and everything about our approach to trading, everything that we learn about trading, the way we engage in the markets based on who we are, and about how we can keep ourselves from getting set off by the emotional triggers. Really about being the best trader that you can be. all the things that we're going to cover in here. You might hire a coach, or go into some programs and spend thousands and thousands of dollars for the type of things that we're going to talk to you about in this. This is nothing like that. I mean, a couple $100 is an unbelievable amount of money to pay for the incredible amount of knowledge that we're going to share. Every one of these videos has got a worksheet that comes with it. You'll be able to do some homework around integrating the things that we're talking about. There is really an unbelievable amount of information in here to really help you get balanced. I mean, we really wanted to keep it very affordable. And I share with you the experience that I've had in 42 years. As I said earlier, this is about you being the best trader that you can be through the lessons that I've learned in trading in the markets, and through integrating many other aspects of the lessons that I've had in all this period of time. I think you'll find it amazing, especially for this incredibly low price. Go to the askSlim website, go up to workshops, click on the 5 essential building blocks to successful trading, and you will see there more of this information, and you'll be able to sign up right there for this reasonable price. I really hope that you take the time to take this great 6-video series. Thanks very much for listening. All right, and if you have any questions about that workshop, just write slim at askSlim.com. I'll be glad to answer them for you. Don't forget, follow me on Twitter at askSlim. Become a subscriber on YouTube. You like the video, give me a thumbs up. That helps us with our rankings on YouTube. And if you want to get information about our memberships, just go to our membership page, and you can write me slim at askSlim.com. And if you're a first-time member, I'll send you a special 1-month half-price trial. So just amazing amount of content that we have out there, and this workshop is just incredible. So consider that. Up your game in trading. All right, so for the best and worst stocks for the week, we're going to take a look here at the charts as we always do. Our focus is on the weekly charts. And some of our charts are incredibly messy because we have so much information on them. Well, because I trade them and I look at them that way and write a lot of notes to myself and to our level 4 subscribers who get our charts. So take a look here at the biggest gainer of the week, which is Tesla. 18% gainer on the week as they lost $3.06 a share, and Elon Musk talks it up. Simply, the shorts got absolutely crushed in here. They say that they're going to be cash flow positive for the year, that they're going to be profitable in 2018. I think that is so bogus. It's unbelievable. But look at that upside week that we had in here. It was just incredibly strong. You can see that. And that gets through a resistance zone that we had in there that we considered a sell zone. So that zone did not stop it, and anybody who shorted there got, well, hurt with everybody else. It jumped through it really quickly as we had this big gain in here. Support zone, you can see in there, really held. If anything, that was a strong message. And these patterns in here are suggestive that this rally will fail. So we believe that's going to happen. Maybe it gets up here and tests these resistances again. The intermediate cycle peak resistance is right there. And it held it last time. It got this big move up here to 374, and we think it's going to decline again. We still think that this target in here is reasonable, and the 316 target got easily hit. That was achieved early, and then we lowered it to 272. It, well, missed that by $14, and we still think that this is going to churn its way down and that this is a whole fake. But 18% on the week, you can't deny the power that you see in there. The next one we're going to look at, one that I don't look at that often, is GoPro, GPRO. They're the makers of those little exquisite cameras, video cameras that you can actually put on drones and it will follow you. It's pretty amazing. And this, you can see, is creating a bullish pattern. I'll show you why this is a bullish pattern. You can see it was in a downtrend. Now, this is the cycles that we look at. You see how that points to the low, the declining phase and the rising phase, declining and the rising, declining and the rising. That's all giving you this failure right over here and this big decline and another one. But here's a positively configured pattern, and this is the first week. So there's no way, I mean, there is a way, but the probabilities of a first week advance being the end of the advance are like about 3%. So the probability is pretty high that it's going to get up here into the $8 right there, into that fib target zone. Important level there at around 860, I'm sorry, 840. So that would be about our target on the upside. We think it can get some further gains. They reported a smaller loss than estimated. The street likes when you lose less money, and the shorts don't like it, and they tend to scramble. The next stock we're going to look at is KLA 10 Core, KLAC. This stock had solid gains for the week, and you could see really nice patterns when you look in here. We are now early in this rising phase. The fact that it almost gave it all up right over here would say that it was a low likelihood that it was going to be able to get all the way up to that level right over here. Earnings beat, outlook strong, analyst upgraded it, and this guidance looks like it was strong. So everything about this looks like it's going to work its way to a new high. Good looking pattern there as you look at KLA 10 Core. Kimberly-Clark, not one that I look at a lot, KMB. You can see in here, you can almost do a class on cycle analysis in this one. As you can see, a positive cycle here that broke down early. Note it got underneath that cycle low support. It set up this decline, a rally right into the sell zone, sets up that decline right over there, and then rallies up in here till major resistance. That says there's only a little time to correct in here, and we believe it's a repaired stock. So we could get a pullback right over here into September. We think that would be a strong buying opportunity. And the last good stock we're going to look at in here is, well, there's that $1 trillion baby, and that is Apple. You know, it was only 21 years ago that they were broke. I mean, they got rescued, and the stock was basically zero, and here we have it now at $1 trillion. So I guess anything can happen, and now it moves up into this confluence area. You can see that we're not giving it a lot of credit for moving a lot higher. Our original target was 205. It got up to that easily, and now this one up here is about 215, and we can see it chopping around in here between 200 215 for quite a long period of time before it then succumbs in here to maybe a bigger correction in October and November. So this is Apple gains 8% on the week, and a very, very good performance. You can't beat that, as their earnings beat, and their services sales were really strong. Legacy stuff really strong, and their high-priced phones are selling well. So there you have it, Apple doing really well. And coming up now is the worst stocks for the week. Worst stocks for the week, well, they really took a slice out of cake, C-A-K-E, Cheesecake Factory. That stock, of course, in the restaurant category. Some of these have had some pretty high valuations, especially Domino's. We've been waiting for that one to come apart, and it may not be all that far off. But in the meantime, we're going to look at one that has just a nightmare pattern. Earnings missed, down 17% on the week, and this is a broken stock. This stock looks to us like it will decline all the way out into December based on this pattern. We have a target of 42 or so, and that breakdown right over here, you see that? So in other words, this is the positive pattern, and then the low. That comes in the buy zone. You see that? There's the rally we expect. It does great up to the 78.6% fib. Only a minor correction right in here. It comes up, gives you a perfect double top, and then breaks the cycle low. That is a huge warning, and that is a stock that is in some serious trouble. It tries to rally, you got to sell it. U.S. Steel, now this stock down on the week and moving down towards our target period. You see those two blue spikes there? That's kind of the time period we expect the bottom to form. It's been in this yellow zone, which is a caution zone, and believing it's going to move down again. Well, if you would have looked at earnings and guidance and everything, you would have said, wow, I mean, this stock should be going up. But it's down 13% on the week. Earnings beat, guidance strong, tariffs are helping, but maybe it's not enough. Maybe either the cyclical patterns were just bad and that's what's pushing it down, or maybe nobody believes that the tariffs are going to last very long and that the steel companies will be helped for very long based on it. So U.S. Steel, a bad pattern. You can see that. It's going to break underneath this important support very soon. It's got about 3 or 4 weeks of decline still ahead of it, and we would expect that it would be a stock that will be still negative pattern, negatively configured moving forward. Symantec, SYMC, talking about using some funny puns. There is no security in this stock, that's for sure. It keeps moving to the downside. This is a story of the bad getting worse. And here is a look at a negative pattern. You see that right there? So it's this low right over here and this low right over here, and it's pointing down. That says the next rally will fail at resistance. There you have it, 34-week moving average, and another big decline right in here. And now this cycle points to a decline out into October. September, October, we have a lot of stocks that are pointing to that as a trouble period as we get into September. Remember I said September 5th to 10th for a stock market peak? I'm going to hold on to that and look for declines into October, November. There, I said it. That's the kind of market I think we have shaping up for us. TripAdvisor, TRIP, this one got a bad trip, and we actually like this stock. Look what it did. It came right down and nailed the neckline this week after its earnings were good, but revenues missed. This looks like a correction also out into September, October. You can see that hitting that support again, or that neckline. Here's that measurement up there. It tried to get up to that inverted head and shoulders target, got very close, but then failed. So we're going to look for about 7 to 8 weeks of still more correction in here. You see that low right over here, about $48. Rallied all the way back up. We think it's going to test that again, and that would be the buy period out there, but that's a ways away. And this rally that it's having as a recovery now, we don't think that that is going to last. So, you know, one of the stocks that really has had some wild stuff going on is Wynn Resorts. Overall, I think the action that we talked about in China has negatively affected, because of Macau, Wynn and Las Vegas Sands, and those stocks have run into a lot of trouble. Wynn, we're even having trouble analyzing this one. It's gotten wild since the Steve Wynn debacle. He's now out of the company because of his behavior. And this one, I'm having a hard time even telling whether the bottom is in place and it's a breakdown or it's just extending. So we're just not sure about that right now. The highest probability is that it's in trouble and will be in trouble for a while. But if it does get a rally going into those resistance zones is where we think it will fail. We're going to talk more about China right now because, you know, if Wynn and Las Vegas Sands are affected, the Chinese stocks are probably affected more. Wynn down 9% on the week. Baidu, B-I-D-U, is another one we want to talk about. This stock here, their earnings missed. It's, more of this China syndrome. This looks like a breakdown to us and a decline all the way out into November or December. This is a really bad pattern that we see in here, and that really talks to what we're expecting in that the decline that we showed you in the bigger show in China. That looks bad. Look at BABA. This one is breaking down right now. It hit that intermediate support zone and then headed to the downside. This is a cycle violation. This points to a decline now, and that decline is likely to take you not to where this is projected because it just broke down, but somewhere much lower in here, and we'll have a number figured out in here probably in the next few weeks. But this is bad. This is a breakdown, and this talks about the problems coming out of China, coming out of slowdown in China, coming out of the fact that there are tariffs with China, and this trade war is not good, and it's especially not good for Walmart. Now you see Walmart railing with the market right in here. This getting up to the resistance zone. Of course, did you know that 70 to 80% of the goods that Walmart sells comes out of China? That, of course, is going to really ding their earnings at a 25% tariff on that goods, so they don't have those kind of margins. And don't be surprised if there's a huge hit on earnings here in Walmart. Walmart earnings are out over here in around in 8/16. That's the date. So I think they're going to take a hit on those earnings. I don't think that they're going to have a good forecast, and this is an exceptionally bad pattern when you look at that. So Walmart up 2% on the week. With Baidu down 7%, Baba down 4% on the week, and those last four stocks we look at are affected by China, and that really tells a story when you look at that these tariffs are bad. They're not good for anybody. They may be protecting, in the president's opinion, the country, and maybe hardball play is the way to go. But we look at that as ultimately hurting, because tariffs are good for nobody. A tariff is a tax, and taxes are good for nobody. And that's takes us to the story of government being too involved, too manipulative, and too much taxes, and too much false economies that we see out there. I'm not going to go any further, but you know how much that annoys me. Yep, I'm a libertarian. All right, so that is a look at our worst stocks for the week, and I'm going to show you right now our short-term view for the coming week. Here is our short-term view for the coming week. We do this every single week, looking at 5 different markets. We take a look at light crude, the dollar and the euro, gold, the bond market, and the stock market. So we're going to look at light crude. We always like to be accountable to how we did in last week. Well, that's no problem this week, because we had maybe one of our best weeks ever on analyzing the short-term movements of the market in price and time. And that's what cycle analysis is, price and time. So take our cycle analysis workshop, and you will learn so much, 20 different video modules in there. So here we go, 90 to 95% correct this week, just phenomenal. We talked about the decline coming in light crude for the week, and it came and bounced. Actually a pretty nice bounce, and then it bounced. Then the bounce bounced the other way back to the downside. So here is a look at that light crude. Those 4 yellow zones are the ones that told us we were likely to get a pullback. Now I want to tell you that the pullback does not look as sharp to the downside as we've seen in these other yellow periods. It broke, and our traders, got paid on it. They wrote me and told me so. However, it's getting support right over here, and it's running out of time. We're going to call this week kind of a down-up week and a small change, down and then up. Momentum negative, but barely negative. It's really more in the neutral category. So we see only a small change in the week, because we see a little downside risk and then a comeback. And that's, not very much change. We don't think it's going to get worse now than that 66.80 number. We think it has problems here at right around $70. So that's a pretty tight range that we're talking in there right now. We're just going to call it this small change on the week and kind of zigging and zagging for the moment. You could see our furthest projection out there could be projecting to higher prices, but that would be out into mid to late August as it gets past some choppy period in here. So that's a look at light crude. For the dollar for the week, we said that, well, we thought it was going to be a week that was small down and the euro small up, but both would be really in tight ranges and eventually breaking out to the upside. So we got this period in here where it was trading in this range until Thursday, and then it broke out. This upside breakout came maybe a day or two earlier than we expected, but that's exactly what we expected. Momentum is still neutral in here, but you see that upward turn? That may be the first upturn that we've had in a while, and maybe it's going to start to expand. So we're looking for more up weeks in here and getting back up to that level of 95.66 or higher in the dollar. So it's doing pretty much as we expected. Just stayed in that range, had a little dip, and then popped to the upside. It happened literally just a couple days, maybe sooner than we expected. The inverse of that is the 6E, which we said it's likely to be in the range and then break down. And you can see it's done that. Breaks underneath that. VTL. Want to learn about VTLs? You can do that in our cycle analysis workshop. And now we believe it is moving to the downside and likely to go lower. A break below this level right over here would be very bad, and we expect that to happen around 115. That's around 115.75 or so, and that would be really bad because it would then set up an intermediate decline, which we think is coming. So this is a breakdown pattern as we see it, just as the dollar is a breakout pattern, and that is what we expect to happen. We'll call the euro down for the week, and you could see momentum in the euro actually turned down right over there on last Friday, and it's starting to expand on the downside. So weak euro, strong dollar, that looks like where we're going to be right now. So that is a look at those, and we're going to look for continuation of those trends that were just established right now. Now we're going to look at the gold market, and we expected the gold market to chop lower, test 120.12 to 120.09. Here it is right over here. It gets down to 120.12.5 and then starts to turn up. That is a bullish piercing pattern right over there. This looks like a bottom forming to us. We expect to get a minor advance. We're going to call a small up week. Momentum still negative. It's going to have a hard time making a lot of upside progress. Our target for a near-term bounce, and believe me, we believe it's a bear market bounce, or at least a bearish trend bounce, is 1236 to 1251. That's right over here to right up over here, and we think we're going to get up into that zone this week. Maybe a little bit of early weakness and then beginning to move up for the next week or more. As you could see, the bottoming phase right in there, all of those nested patterns, and then beginning to move up. So, after we do a little bit of work, you could get some higher prices in there. But again, we see a strong dollar, so we think that is going to limit the upside. That is a look at the gold market. The next one we're going to look at is /ZB. We thought it would have a minor up week. Actually, the 10-year had the minor up week. This one had about an even week after having that swoon to the downside with the Japanese bonds on Wednesday. So you could see that big red bar and then coming back up. Now, there's two scenarios in here. You'll notice that I'm gonna call them 55-45. The reason for that is that the ZN really looks like it put in a bottom right over here, so it extended this decline out. We thought that the bottom might be over here, but that's not what happened. This probability right over here, we'll call that 55% that it's going to do this. This we'll call 45% where it's going to rally and then do this. Either of them is bearish. One of them just allows it to get a little higher. So we're going to call for the potential of a rally getting up to this 143.20 area, to 144.04 right over there. That's the potential based on what we see the 10-year signaling to us. It could go either way. Either of them resolve themselves after the next week by moving lower again. So we think that it is a sell zone in there for short-term traders, and we think that's a fairly high probability place that any rally would stop. So we're going to call the bond market just attempting to get a little higher prices, and then really failing and moving to the downside again over the next 2 weeks. That's what we think are the highest probabilities. So that is a look at the bond market. So we made a call last week for the stock market that was kind of unusual, and that is was giving you a range, a low and a high that we thought it would trade in, that we thought it would be stuck in. We actually think that the same thing is happening. Now, a little note to our subscribers is that I panicked a little bit yesterday because we had a possible breakdown in the S&P only. The other indexes were not close to that. So I sent out a chart update which showed a more negative pattern in the S&Ps than I had it in the NASDAQ or the Russell. So because the breakdown was false or it didn't follow through, it then had me revise the revision. So I'm going to have to send out another chart revision to our subscribers. So this is what happened. The possible breakdown right over here was false right here, as we had the early sell-off that just brought in a lot of buyers right there on Thursday. We had that big move up after it had moved down on the tariff news, and then the market got right back up here to the 78.6%. So this is a tough area for it. Last week I said that it would trade in a range, and I said that the range 27.94 to 28.35. The low was 27.96. The high, well, right now is a 28.36. So I missed it by 2 points on both sides. Pretty unusual, where I had expected that kind of a range, and it was practically spot on. So what can I do for you this week? Well, I think it's this right in here. In other words, a little further attempted rally, but then giving some ground. And again, I'm going to call a narrow range in here. This area right up over here, 28.43, looks like a where it's going to run into some trouble. And then you could see the slim ribbon giving it this rising support up this way. We're going to call that around 28.05 or so on the bottom. So it's kind of this range that we're looking at right in here right now. We don't think that it's going to make a lot of upside progress. I still think that this shape in here is worrisome. And we're getting a Russell pattern. I usually don't show you the Russell, but the Russell is extraordinarily weak, and I'm going to show you that pattern right in here just so you get a sense, where it's failing at that resistance zone, giving you this huge down day in here. Well, not so huge, 10 points. It was worse. And so it's really showing a lot of weakness, and it's in negative momentum right now. So with that being a signal, and the Russell, which was the driver, sorry, got to move in here, really is giving me some sense that we're going to be kind of stuck between the resistances here and this upward momentum and rising phase here. It's likely to keep us in a tighter range for the week. Trouble at at 28.43, and then at that next level right there, which is 28.49. So you can see we have that area as where we think it's going to stop and then move lower, and then the slim ribbon holding it up in here. So we don't think there's a breakout or breakdown in the coming week. There's just no news that seems like it's going to really affect the markets right now in any significant way, and yet we see momentum, in the NASDAQ NASDAQ faltering, going back and forth, and in the Russell lower. So that gives us some reason to believe that it's going to be hard to make some real upside progress from this point this week. That is a look at everything that I planned on showing you. I hope you found the information in here very valuable for this week, and that you did well based on the fact that we had some great analysis in the whole last week. So make sure that you consider taking our workshop, 5 Essential Building Blocks to Successful Trading, or our Cycle Analysis Workshop. You can go read about those on our website. And also, again, you can send me an email, slim@askSlim.com, and you can then get a half price 1 month trial for our memberships. And if you want to look at our stock index report and you want a sample of that, write to Matt@askSlim.com, MATT, and he will send you a free sample. No obligation, no nothing. Just we'll send that to you and you'll get a peek at it. And if you want to sign up for that, we're still in our initial pricing at just $19 a month for amazing and really amazing stuff to come on that product also. So that's it. It's so crazy out there. I want you to be so unbelievably careful. And we're always wishing you great trading.